this isn't reality. Like, we're not going to be able to buy or even save $50,000. So let's look elsewhere. You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren. Hello and welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson, joined as always by David Warren. We're here to bring you the latest and greatest. David and I are both level 2 mortgage agents. Dave is also the owner of Referral Mortgages, wearing a beautiful new lid. And we want to give a quick shout out to our amazing sponsors, Guertin, Poirier, Avocates lawyers, Big Insurance in Westboro, CENTUM, and Easy Neon Signs. If you go to easyneonsigns.ca and use the promo code TOREP, you get 20% off each and every order. David, how are you doing? What's going on over there?
I'm doing well. We're an hour behind recording. A little slower morning. I know you just came back from Phoenix.
Yes.
I got it's actually Ollie's birthday today as well.
Wow.
Yeah.
Big party this weekend. I'm excited.
We've actually been doing this podcast longer than he's been alive.
That's hilarious. Wow. Yeah, it was really funny on the trip. I mean, obviously I had my children young, so I was talking with all the other parents, and most of the kids on my son's team, my son's 14, most of the kids on the team, it's their oldest. And Madden's like my baby, you know? And Serena's 25th birthday was while we were away. So I was telling them all, they're like, what? Like, oh, I thought that was your friend.
You look great for 60.
Yeah. That was awesome. No, the tournament was great. I'd never been to Phoenix or Arizona, and great spot. Everyone was super nice. Food was great. Restaurants, fields were amazing. Boys came away with second place, which was pretty exceptional. And the games it was awesome. I mean, I know I've traveled for tournaments growing up, and anyone listening to this, I said this to you guys in our group chat, but anyone listening to this, if your children play team sports, doesn't matter if it's house league or AAA or whatever it is, like if they're playing team sports, like never underestimate the importance of those relationships, of those experiences. Like having played sports growing up, I still am friends with a lot of my teammates. I still use a lot of the lessons I learned back then in life today. And it's just, they're memories that last a lifetime. And yes, obviously it's a huge commitment of time and money and so on, but really it really helps create amazing, well-rounded, like welcoming human beings, know how to use teamwork, know how to overcome obstacles. Like I think it's just for life in general. I think it's a great training ground, but I think also just the relationships you build in these sorts of teams, these sorts of opportunities are just like, they're so important to developing as a human being,
Yeah. No, I completely agree. It's I'm sure it was nostalgic for you, kind of just remembering all the tournaments you went to growing up. But
so
on other things, I don't think people care too much about our sentimental feelings about sports.
Our parenting podcast, the Ottawa Parenting Podcast.
Nobody gives a shit.
Here we go. Let's get into it. So GDP numbers.
Yeah, GDP came in higher. The headlines came in higher than expected at 2.6%, far above a consensus expectation of a negative 0.5, allowing us to avoid a technical recession. Really on the surface is what a lot of people look at and what will be talked about in Parliament and things like that. But really on the surface looked great and upside surprise. However, a sharp rebound that would seem to suggest the economy's bouncing back. But when you kind of look into the numbers, you kind of actually start to dissect it a bit. It was really driven by a massive increase in defense spending by the federal government and a massive decrease in imports. So that was really kind of what was driving that figure. And so, it kind of creates a distorted view a bit. And so really kind of looking on a go forward basis, really is this going to seemingly strong GDP print, could momentarily shore up confidence in the economy. Again, people are going to talk about, being great, 2.6%, but it might support rate stability for now, but in the future be kind of superficial and kind of a head fake, if you will, that the underlying economic weakness still remains, and still that raising the risk for demand could soften again. And in a fragile, growth environment, lenders and borrowers may still maintain cautiousness, even though people don't really read the underlying information. They kind of look at that headline
Mhm.
which could still affect credit availability, underwriting standards, appetites for mortgages, things like that, and overall like mortgage activity.
Yeah, it feels a bit misleading, right? Because it's not actually supported by like consumer or business activity.
Mhm. Yeah, it exactly. It's not being driven by the, overall economy. It's really kind of in that, again, like that, the government spending. It's not really, it's not a real GDP boost, if you will.
Mhm.
So yeah, so we'll kind of see and monitor that as the months kind of roll on and continue on, just to see whether these figures kind of come to a head at, or anything like that. But, some of kind of what's kind of happened and updated has been, really for the December 10th Bank of Canada meeting there, it did boost or bump up that no change odds built into the bond market of a 92% chance of no change, 8% chance of a quarter point cut. So that's basically, unless something drastically changes over the next couple of days with other announcements, that's not going to happen.
Yeah,
Um,
and the US, like CME, which does like the FedWatch tool, they're saying it's roughly like 85 to 87% probability of a quarter point drop by the Fed in the US, which is December 9th, 10th meeting. So they're kind of the opposite. They're almost like guaranteeing a cut, and we're kind of the opposite.
Yeah, no, absolutely. And we've got Canadian employment numbers coming out for November numbers are coming out this Friday preliminarily. We've got the U.S. initial jobless claims coming out on Thursday, and then the U.S. S&P Global Services figures coming out for PMI for November on Wednesday as well. So there are some announcements coming this week, which will also drive that decision in the U.S. and Canada. However, I think it's a foregone conclusion that we're going to remain the same, and the U.S. is going to drop.
Yeah, I heard this morning too in a podcast I was listening to that they were saying that the Black Friday sales, and having been there and seen it, Black Friday sales were, I think, the highest they'd ever been. Like there was definitely no decline in Black Friday or the Cyber Monday sales. Like the numbers reported by Amazon and Walgreens and all these kind of American retailers was that people were spending more than ever. Now, is that on credit? Is it on lines of credit, credit cards, etc.? Probably, but seemingly no slowdown on the spending side of it, at least in the US. So, with that rate cut coming as well, I think from a market standpoint, like the actual stock market, businesses, I think we'll see it increase going into the end of the year. But as far as rates and stuff go, like even seeing our bond go up, which I know we were going to talk about that in a bit, but seeing our bond rate increase, which typically is going to signal that we're going to see an increase in fixed rates potentially, I think that would be very surprising to a lot of people. I don't think a lot of people are expecting rates to go up. I think everyone thinks, oh, well, the economy's not doing great. We're going to continue to see rates go down, which, you know, doesn't sound like that's going to happen based on what you just said about the Bank of Canada and the increase of bonds.
Yeah, I mean, really kind of that underlying, again, for the last quarter, consumer spending remained soft. Business investment was stalled and the labor market cooling. So, chief economists kind of described the situation in Canada as the economy running on fumes, even
Yeah.
though that GDP kind of headline number being up. But they caution that this number probably does not signal a strong turnaround, but rather a temporary boost that masks the underlying fragility. For mortgage and housing markets, this means a broader slowdown is still very much alive, and overall outlook remains heavily dependent on interest rate policy and how much pressure consumers can absorb into 2026. To your point about the U.S., having Amazon and things like that in the U.S. reporting strong Black Friday figures online and Cyber Monday, I'd be curious to see again in their overall numbers, whether that maintained throughout the other buying period or the quarter, if it was because their inflation is still so high in the US and so costly, and whether, people were kind of just waiting around needing those deals in order to purchase anything, and then everything else being flatlined or down drastically. So some of these figures coming out, obviously not this week, will not show what's going on in the States from that in that regard. But obviously, as we keep talking about, outside of Canada continues to have impacts to our bond market, to our rates. And so, today we saw, the 5-year yields on the Canadian mortgage bonds jump up 9 basis points. So yesterday there was a global sell-off of bonds. And the reason for that, you wouldn't think that Japan has any impact in Canada, but it does. So
Well,
the,
except during the World Series. You know, we know Otani had an impact on the Canadian market for sure.
Wow, wow, wow. Just a
The
dagger to my
Japan,
heart. Just a just a dagger to my heart. But this, really the jump in Canadian bonds and the US sell-off of bonds, sorry, the global sell-off in bonds was triggered by the central bank of Bank of Japan suggested imminent rate tightening. That kind of just triggered everyone else to be cautious and a sell-off because they're expecting there to be other issues across the board and within other countries. So despite softening manufacturing data in the US and Canada, the economic weakness failed to prevent the yield surge. Bond markets instead reacted to global fixed income pressures. So why does it matter? A 9 basis point jump in 5-year bonds increases borrowing costs and pushes fixed rate borrowing costs in Canada up. Given how closely mortgages, especially the 5-year mortgages, are tied to these yields, the spike tends to translate into higher posted fixed rates, or at least a higher starting point for discounts on those rates. So, it a lot of times it reduces the likelihood of a deep discount. And so again, this is something that you want to look at again, as you're coming up for renewal, as you're doing anything, jump on it now, even if you're 4 months out, get something locked in with where rates are at. We talked about it last week and before that there is some upward pressure on fixed rates. And so if that is the preferred strategy, then really kind of looking at locking in now sooner rather than later, because all of these outside influences do impact Canada, and it's not just what's within our borders.
So something else that I wanted to mention, actually, that again, just talking about the impact of other countries' decisions. So the U.S. today has ended, or sorry, yesterday, December 1st, ended its quantitative tightening. So that basically, it's like kind of, they announced it, I think, in October that they would conclude the reduction of its like aggregate security holdings on December 1st. So it basically means they're shrinking the balance sheet and letting treasuries and mortgage-backed securities mature without reinvesting them. So what does this all mean, all this like jargon? For sectors like mortgages, real estate, business credit, et cetera, it just means like improved liquidity, less downward pressure on bond market demand, which might ease some of the stress created by rate hikes and prior quantitative tightening. So it's just like all of these, like ending quantitative tightening is not the same as starting like a full-blown balance sheet expansion or like quantitative easing, which I know we've heard that term up here in Canada, but it just means that they're committed to stabilize holdings by rolling those maturing bonds into short-term treasuries rather than re-expanding the balance sheet aggressively. So I don't think it guarantees mortgage or lending rates will drop, at least in the US, but loan pricing, depends heavily on interest rate expectations, as we see in Canada as well. Like when we see rates expected to come down, typically interest in real estate increases because people are like, oh, now's the time, right? This is when we should get in. When we start seeing rates going up or bonds going up, people tend to hesitate a bit more. And that obviously has a massive impact, especially in our industry.
Yeah, no, for sure. And I think all of this to say, what we've talked about before is there are, again, I just kind of will reiterate the same thing is there's a lot of outside influences that can impact Canada and our rates and where we're headed. So we'll kind of see. And to that as well, there's things within our borders that, happened even just yesterday, which can create less competition in the
Like what, David?
marketplace. Laurentian Bank, which we're border, Ottawa is border to Quebec. A lot of people have seen Laurentian Bank as a branch within the Ottawa market and within Quebec, and they were just acquired by Fairstone Bank. So Laurentian Bank has been around for 175 years. So they have transactions worth roughly 1.9 billion total value, but what they've sold off to Fairstone Bank was their commercial arm, and then they have sold off their retail and syndicated loan portfolios, like basically client-facing mortgages and small business side of the bank, to National Bank. So Fairstone has bought up their commercial side, and National Bank is absorbing the retail side. Now, National Bank was recently purchased by Canada Western Bank. So there was a consolidation there, which created a larger entity. Canada Western Bank is based obviously out in the West. They don't have a branch as large a branch channel. So it's expanding that. So it's allowing for a bigger network there, et cetera. So, or rather the other way around, National acquiring CWB. So they're expanding like National Bank out west. But again, like a consolidation of a larger Western bank In this case, they're also now National Bank expanding and acquiring the retail side of Laurentian, is expanding their network even more, providing clients in Quebec and across the country, really two less options of institutions. And then on the Laurentian side, again, like consolidating that commercial department. I don't know what that's going to have or entail for Fairstone, who also owns and acquired at the beginning of this year in January 2025, closed on the transaction of buying Home Trust
Home
Bank.
Trust, yeah.
So they acquired Home Trust, which closed in January. So it's, again, that consolidation of banks within Canada, and interestingly, two Quebec banks that are, French banks that are really kind of consolidating. National Bank taking up Laurentian, basically eliminating an entire Quebec institution. Really, you always had in Quebec Desjardins, Laurentian, and National Bank, and now you've really just got, and obviously there's others, but really you now just got Desjardins and National Bank. So it's really interesting from a competition standpoint how that's going to shake out. That's really kind of the, in that, like for retail, just keeping an eye on that. It'll be, it hasn't closed yet. It's targeted to close in the next couple of months, but we'll kind of see there how that changes things and whether it becomes a good thing or a bad thing. Whether that offering expands with that kind of for National Bank picking up that retail side and having that expansion into the West and into Ontario more so than they had before. But again, all of these things can contribute though to less competition, higher rates because of it. Because there's less options for people in a specific marketplace, especially for Quebecers, where there is already limited options for institutions.
Yeah, and that kind of makes me think too of like all the major Canadian banks are delivering kind of their earnings right now, and we've seen a lot of them, even though they're dealing with significant restructuring, layoffs, internal realignment, et cetera, like Scotiabank, who just reported, had stronger than expected earnings. They beat expectations even after all the severance costs and restructuring. Like we've heard of all of these job cuts in Canada, but they have still crushed their earnings basically. And I think a lot of the retail lending, I think the lending side of it, like typically over the last 10 years, I think the majority, other than obviously account fees and things like that we all pay. I think a lot of people don't know that, but most of the banks, like the major banks' revenue is derived from their monthly banking fees. Like you would think it comes from interest and all that, but it's that $15-$20 a month that millions of people pay. That's where the majority of their revenues are coming from. At least this is my understanding from what I heard many years ago, being at the bank. But the lending side has obviously been, has been struggling, I guess you could say. But the capital markets, fee-based divisions, so like the account holdings, investments, obviously, like this year, I think the overall market is, I think, up like almost 10% from January 1st till now. And we're going into December. Everyone's expecting kind of that's what they called it, like a Santa Claus rally going into Christmas, where everyone's kind of buying and people are with family and talking and this sort of thing. So I think where the traditional mortgage businesses are struggling for the banks, they're making that up in the form of account costs, trading fees, things of that nature. And this is on top of, as I said, like lots of layoffs, lots of realignment internally at those banks, and they're still reporting positive earnings. Like they're still beating their earnings expectations, which I think to me is interesting, because it makes me wonder if we're entering like a new era where the big banks rely less on the mortgages and more on that capital markets to drive profits. Like, people looking outside of Canada potentially for that investment opportunity, or, moving away from real estate and looking at something that maybe isn't as brick and mortar, Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Guertin, Poirier, Avocates lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at guertinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? CENTUM has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with CENTUM. Learn more at joincentum.ca. This episode is brought to you by Easy Neon Signs. Visit easyneonsigns.ca and use the promo code TOREP, TOREP, to get 20% off each and every order. easyneonsigns.ca, Canada's finest custom neon sign maker.
I thought something in the Scotia earnings that was interesting from an underlying is that their loan loss provisions, they increased. It was at 1 billion, and the expectation was that it would increase to 1.08, but they actually have their loan loss provisions at 1.1 billion, so an increase of 100 million. Which what loan loss provisions are is that it's an amount that the bank sets aside as its assumption of what's going to be bad debt or bad mortgages defaulting. All the banks have had to increase this over the last few years on their balance sheets and allocate funds for that under that category. And so a lot of that is kind of, again, like an underlying indicator of what they're expecting in the marketplace and the economy. Yes, they might be posting profits, but it's coming from other areas and not in mortgages, like you said. And they're all having to allocate all of this bad debt assumption. So it'll be interesting to see as the rest of the banks, the big six, roll out their earnings, whether they have had to increase this as well. I mean, we saw and we talked about a couple of weeks ago the increase in defaults. Mortgage defaults having, I think it's up double or triple year over year. And so obviously it's still very low from a percentage standpoint, but that obviously increasing, the banks are obviously having to take that into account, and obviously they're feeling that as well. So that'll be kind of something that I noticed in that'll be interesting to watch. And again, like you said, that when they're downsizing and consolidating employees and their overhead, means that they're anticipating kind of like muddy waters ahead. And when they're having to increase their loan loss provisions, means that they're also anticipating muddier waters ahead. So kind of both of those, I think, are interesting as an indicator of what they're feeling within the economy.
Yeah, it was actually an article I saw yesterday in the Globe and Mail, which was titled the title was "Priced Out of Real Estate, Young Canadians Turn to Booming Stock Market." So kind of the opposite, like people saying, okay, well, I have 15,000 saved. It's not enough to get me into like kind of that first home. So they're actually looking more at like investing into the capital markets versus real estate, which is definitely a mind shift, because I think when we were growing up, it was always, okay, you save, you get your down payment, you buy your home, you grow your family, et cetera, maybe buy an investment property. But it seems like the sentiment, I mean, having, my daughter's 25, my son's 19, like, I don't think currently they have aspirations of buying homes. You know what I mean? Now, my daughter has been asking me, and we've been kind of strategizing on different like TFSA strategies, RSP strategies. And that's definitely a part of your invest. I'm not saying only invest in real estate or only invest in the market, but it seems like the mentality for the younger generation is potentially they're not even considering real estate. It's not even like, I think we've talked about it before, but in Europe, I think 85% of people rent or something like that, right? Like it's not even, they don't even think of ownership as like something they're interested in. It's just, we just rent. That's our cost of living for shelter. And then we invest elsewhere, and I think it seems like, at least from what I'm hearing from, my small microcosm family here, is that it seems like it's more of okay, well, maybe down the road, but for now, like, let's just invest in something that's going to get me, like, just going to grow that money, right? That's maybe secure, or maybe longer term, like a longer horizon, maybe, 10, 15-year plan, as opposed to trying to find something in the next, 5 years to live in and own as a real estate property.
I think there's also that, what is coming out of CMHC from the federal government and provincial government of kind of this mandate of building purpose-built rentals only.
Yeah.
It's kind of
I guess if that's all you're hearing, right?
It's all it is like that there's only rentals available. There's no homes to purchase, to live in, and everything that is being spoken about is almost crushing that dream of home ownership and being pivoted to, well, you don't need necessarily own a home, you could just rent instead. And so I think a lot of people, it's, overhearing that for the past number of years and seeing the cost rise of home ownership being unattainable for so many. And on the flip side, hearing from government and from the CMHC talking about rental and pushing purpose-built rentals. it's hard. I think it would be hard to be 25, 19, in that early 20s, even late 20s, to think something other than I'm going to have to just rent the rest of my life.
Yeah, and when you look at, if you look at, let's say, the average home price, now I know most people buying their first home aren't buying, the average $700,000 home, but if you look at a $700,000 home, the minimum down payment to get into that is $45,000, right? Whereas we're thinking about, let's say 15 years ago when we're kind of getting into the market, they had, the 40-year amortizations, 0% down payment. It was just a different world, right? To enter the market itself. You could get a $500,000 place over 40 years at whatever it be, $800 a month or something, right? Whereas now with rates and with the down payment and everything you need, if you're taking a $45,000 down payment and then you're paying, $3,500 a month or whatever that works out to be, that's a huge commitment long term for yourself and your partner, especially if you're just doing it on your own. Most people now, I don't see too many people buying real estate based on one income, like, I mean, maybe that's just mortgages in general. Like most people buying are, starting a family or, already married and are, renewing or whatever. But I would say it's probably, under 20% of people that are buying individually as like a single applicant. Like most times it's either two or maybe potentially even three because they're adding in a co-applicant or a parent or whatever, right? Just to qualify. So we've seen a shift even since we've entered the market in 2013 in just the structure, the overall structure of mortgages as a whole. It seems to be a lot more like, families are very involved, like whether it be a gifted down payment, co-applicant, like we're seeing that more and more, I would say. Maybe not a huge increase, but certainly more than maybe, 2013 when it was, home prices were obviously a lot lower. I think the average home price was probably 400,000 back then, give or take 450. So it was a different market, different world really that we were living in. But still, I think we've seen the sentiment shift where people are not, like I said, like my daughter, 25, 30-year-olds are not thinking, oh, I'm an individual, I'm going to save up and buy a home. It's like, okay, well, they're doing other things. They're traveling, they're investing in the market, going out and actually spending that money, which I'm sure probably has an impact on the amount people are spending as well. I think is dictated by the fact that if they're not having to save it, or if they don't think it's possible to save to buy a home, well, let's just pay our rent and let's go out for a nice dinner.
That's $8 latte.
Exactly. Let YOLO, So yeah, so I think it's important, obviously, if you're a parent, to have those conversations with your kids about the importance of saving. As soon as they are 18, essentially, like, start contributing to that RSP, that TFSA, that FHSA, and let it grow over time. But I think just the overall mentality of Canadians right now, especially younger Canadians, is that this isn't reality. Like, we're not going to be able to buy or even save $50,000. So let's look elsewhere.
Yeah. Hopefully there's we've talked about it before. Hopefully some of these initiatives actually have a shift. Hopefully the narrative shifts as well for young people, of not just in rental, but in home ownership. The way that things are going right now and what's being spoken about purpose-built rentals, I don't think that that's going to shift anytime soon, which is unfortunate, because I don't think it should be pushed out of people's minds right out of the gate. Not everyone needs to own a home, first and foremost. Like rent, there's nothing wrong with renting either. Like you said, pivoting, maybe where that savings are going or being invested, and that's completely fine as well. There's great pros to renting as well.
Well, if everyone owned a home, there'd be no renters,
Yeah. But it's not for everyone. Like, it adds flex, even for people working, for people that travel quite a bit with their employer, or looking to just not have to worry about the day to day or worry about payment increases of property taxes or anything like that. They can just have their rent and that's it. And it's sometimes less than home ownership of what it would be to own a condo or an apartment of the same size
these days, right?
Yeah. So, that's, home ownership is not for everyone, but it should be a choice and not a forced choice.
Yeah. Great.
On that positive note, should we slide into some mood boosts?
Yeah, I got 4 today, maybe even 5 if you want me to get real wild. But I'm going to go 4.
Let's see how the first 3 go.
Okay. All right. You tell me after 3 if you want more. Number 1, what kind of shoes do frogs wear? Open-toed sandals.
Mm-hmm.
Open-toed.
Mm-hmm.
Number 2, I just built an ATM that only gives out coins. I don't know why no one's thought of it before. It just makes sense.
We're not trending towards that 4th and 5th.
Number 3, did I ever tell you about the time I went mushroom foraging? It's a story with a morel at the end.
Okay.
All right, I'll do one more. I'm going to do one more for all the people that actually care about these.
We got to try.
Number 4, what happened when 2 slices of bread went on a date? It was loaf at first sight.
Wow. We do not need a 5th. We do not need
All right,
a 5th.
we'll stop there. Thank you, everyone, for dealing with us. We'll be back next week. So just if anyone's still listening, we're going to do 2 more episodes this year. So we're the 2nd. We'll do one on the 9th and on the 16th. And then we're going to take a break until January. On the 16th, we're going to do the full year in review. We're going to look at our predictions from the first episode of the year, see how right or wrong we were. And then we'll kind of lead off into the holidays on a positive note. So just want to say thank you to our sponsors. Okay. Guertin, Poirier, Avocates Lawyers, Big Insurance in Westboro, CENTUM, and Easy Neon Signs. David, have a great week. We'll see you soon.
Happy birthday, Ollie. Deuces.
Happy birthday, Ollie.